Hey everybody, this is Richard. I'll be doing the May week 3 review today, and I know that this video is a bit late. I was actually out of town for a few days, and so wasn't able to get it done in a very timely manner, but I am doing it just for consistency and so that we can all look at how we did do on the third week of May. So that'd be covering from the 15th of May through the 21st of May. So before I do that, though, we'll get started with the disclaimer. Just remember that trading futures does involve substantial risk of loss. It's not appropriate for all investors. Remember, I'm not a commodity trading advisor. We allow the algorithms to be traded under what's called a letter of direction. Feel free to pause the screen, though. You can read the entire disclaimer. And yeah, keep in mind that, of course, as I've mentioned, there's risk involved in futures trading. All right, so this is going to be a fairly quick review, but I did want to, like I said, talk about each week as we went through. And so circling back, the first thing I want to say is that the week actually ended up with the S&P closing lower, not by a lot, but a little bit lower. That's actually what this chart over here on the right is showing, is basically the dotted line starts right there, and that's where the S&P, that's where the S&P closed the previous Friday, and then here's where it closed the Friday of on the 21st. So it did close down a little bit, not by a lot, but by a little bit, and so just keep that in mind as we look at how the algos did. But overall, the 10-year did fairly decent, actually. The 10-year, even so, the market closed down a little bit. The 10-year actually rose a little bit. So that's a good sign. Now it was very fractional, though, so not by a lot, but it did rise just slightly. So that was good to see, though. The day trade algorithm did have a really good trade on the 20th of May, a really good trade that it had, and so it for sure gets really high merits for this. Now, unfortunately, if you're on the swing trader, or more the wave trader or the swing trader, then you didn't see this trade, and so your results would have been a little worse than what we saw. But this was a really good trade that we saw, and so the day trade algo did do a good job on it. So far those two algos did a pretty good job. The one that contributed to the losses was the momentum S&P. And as I've shared multiple times, this can happen when we roll over, kind of like we did. We had two stop outs, both for about $850, and that's really what contributed to the losses that we saw. But because of those losses, I really gave the algos a D+. Honestly, in some ways, I feel like a C might be okay. But because we were down more than $1,000, I didn't want to give it a C, because I think it probably sends the wrong message that maybe that I'm not being fair on the grading. So I did want to be fair on it, and so I gave it a D+. Now the reason why I didn't give it a D or an F is because, again, a lot of this is judging the algorithms on how they do based on what the market did. And in this case, the market sold off, and it's no surprise that when that happens, we can get stopped out of a few trades initially. Now, after that, the algorithm had a no-buy signal, and then, of course, the market rallied after that. So that was tough to see. But overall, the S&P closed down a bit. The momentum S&P algorithm took two losses on these stop-outs, then got a no-buy. The day trade had a really nice winning trade, and the 10-year was up fractionally. So you put it all together, and we were down about $1,300 for the week, or about 6.5%. So that's what we did for the week of the 15th to the 21st. Thanks for watching. And of course, if you have questions, feel free to reach out, sales@AlgorithmicTrading.net. Be happy to walk you through more of this. And with that said, thank you so much and have a great day. Bye.